Hello traders, welcome to another daily analysis. Right now, today is for February 2nd, but we just passed midnight, so we are actually entering to February 3rd Eastern Standard Time here. Now you might have noticed my analysis has become quite late, and I did it by purpose actually, because I adjust my basically my life schedule a little bit. Right now I do like to do it basically after almost at the end of Asian session, because I think it's better for me to just include what's happening in Asian session, so that you will have a better fundamental pictures if you are going to trade the London session all the way to the New York session. So I just think it's better to do that way than I can including more news updates. And again, let me know how you feel. I do like to do this way. Sometimes, of course, by doing this way, I do miss out some trade, especially when there is a risk event like yesterday when we have the a very positive surprise from Australia, the trade balance. I will miss those kind of trades from time to time. But nevertheless, I'll see how it works. I just find it's better to give a much elaborate pictures. So today, which is yesterday, we started the London session with construction PMI from UK, and as mentioned, it wasn't really too much reaction. The market was virtually muted, and the reason is because everybody was waiting for the Bank of England release, so no one is going to really to trade this construction PMI from UK. Now, on top of that, construction PMI was never as important as service PMI for UK. The result came out a little bit slightly negative, so nothing really too important. Finally, the Bank of England released their statement, and everything was as expected. The rate was unchanged. The statement itself was also very neutral, and basically Bank of England gave out two scenarios. So they're basically saying that they are going to either raise the interest rate or cut the interest rate. So basically, they didn't really say anything. If you know the drill, they just say, okay, we might raise or we might cut. And as mentioned before, that was really the sort of paradox for UK. It's because their inflation had kicked up due to the devaluation of currency. However, the economy did not grow strong enough for them to justify these inflations. Normally, the inflation goes up. For example, right now in US, the inflation has picked up because the labor market become really strong, because the job data, because the productivity, because the GDP number, everything works greatly for US to show an economic expansion, and that's why the inflation goes up. So that's a typical textbook economic theory for US. For UK, it's different story. The inflation kicks up due to the Brexit, and their currency dropped significantly. So that's why I would keep mentioning that Bank of England, their hands are pretty much tied. So they offer two scenarios, basically saying that if the wages grow faster than expected and economics keep booming, then the inflation continues to go up, then they will tighten the interest rate. But if the consumption and the spending growth slows down significantly, then they have to cut the rate. So again, as I mentioned, it basically didn't give us any clue or guidance, and the market nevertheless sold off British pound largely. Now, this has nothing to do with the fundamental side. Basically, it's again a buy rumor, sell fact effect. People were expecting Bank of England to not going to raise interest rate, but at least have a very hawkish statement, just because the inflation had picked up. Now, however, from today's Carney's comment and the Bank of England's action, we do have a better picture of what they are going to do. They are really going to hold this wait and see mode right now. And despite the expectation, it's because they're really not going to do anything drastically right now. It's really best for them to wait and see. Especially right now, we still don't know how the Article 50 is going to be triggered. We still don't know how the UK is going to negotiate the new deal with Euro and US. All these things are going to be very uncertain, and it is really unlikely for Bank of England to do anything to too hawkish or dovish at this moment. Of course, we will have to see what happened to the data. But because of that, nevertheless, the market was quite disappointed from Bank of England, and they sold British pound. That's the main catalyst in London session. Then followed by US session, there was New York session. There was really nothing particular. We did have the usual unemployment claim. This was not a tier 1 data because it came out every week. However, for this week particularly, it's a bit different because tomorrow we will have the non-farm payroll. So people were actually trying to basically trying to take a peek to see how the non-farm payroll is going to pan out. And from yesterday's ADP employment data to today's unemployment claim has once again been very positive data. It just gave a much more conviction that the non-farm payroll is going to be solid for tomorrow. Finally, we enter the Asian session just happened a couple hours ago. Have the manufacturing PMI from China, which came out a little bit negative than expected. And as mentioned, any worry sign that the Chinese manufacturing slows down will be a negative impact for the global sentiment and particularly Australia. Now, another notable news is that China has also raised their short-term interest rate just now. And that's an early sign that they are trying to control the debt issue and the real estate bubble. That's a good thing. However, by doing that, they will further diminish the manufacturing growth and they will further diminish basically the cheap money. And that will put a lot of pressure into the stock market and the commodity price, which actually had already happened just now. We saw the Asian equity already dropped and the commodity future has already dropped as well. Of course, this will affect, besides China, will affect Australian dollar and New Zealand dollar greatly. So as mentioned, that's something you really have to pay attention if you are trading Aussie and Aussie, is what's happening in China right now. So that's going to basically be the main catalyst, I think, for the London session that's about to come up, is that Australian dollar will most likely be sold throughout the London session just because of that. Also, this is the first movement they did after the Lunar New Year, so it will be quite basically a sentiment conviction for the Chinese government to say that, hey, this is a new year and we are going to basically tighten the market to watch out the debt and bubble issue in China. So again, it's not a bad thing for the global economy, but it's not a good thing in short term for Australia. Equity market, again, from previous Asian session to European session was all down, all the way until US session, which will have a mixed result, with Dow went down, but S&P closed up. WTI went up today, but lost momentum, while the gold market still climbed up very high, and the US yield was pretty much flat. So, what's my current view for the market? Well, for Euro, I think it's still a fundamentally bearish currency and sentimentally neutral. Fundamentally bearish because today we have another comment from ECB's official saying that yes, regardless of the inflation, that inflation are basically headline inflation, means that inflation was mainly due to the energy price. So even though the inflation has picked up, it does not signal an economic recovery for Euro. They don't think it's stable enough for them to remove the QE. On the other hand, we have officials from Germany continue to express their desire for ECB to exit QE program. But since ECB is very firm on their stance, so we do think for the short term right now, the fundamental for Euro is still bearish because of that. Another thing you have to consider is that you probably, depending on where you live, but you probably are aware there are more and more news from the French elections. There are more and more basically political drama. And that's really going to escalate it faster when we are approaching March. And an April election will be very important, not only for France, but for the whole Eurozone. So it's going to be very unstable political situation. Now, ECB is not really going to do anything prior to that because they don't want to rattle up the market only to see an upset result from France, which is going to rattle up the whole Eurozone. So most likely they will be quite firm and moderate on their QE program and not going to do anything about it. That's why it's fundamentally bearish. Sentimentally neutral is because there's really no negative sentiment right now for Euro. On the contrary, Euro has been acted up pretty well when versus US dollar. So that's why it's a sentimental neutral currency. Doesn't mean it's good to buy. It just means it's no particular catalyst to sell it. But of course, you can always pair it up with other stronger currency to sell against. For US dollar, we have 2 consecutive days of promising data. And tomorrow, the non-farm payroll, right now, the census is that it's going to be a quite strong non-farm payroll. And it's also going to see unemployment rate probably going to drop further. And the hourly earning is probably going to raise up further, because last time it was a decrease a little bit. And really, the fundamental side has not changed. I also read a new article from Goldman Sachs saying that people were asking why US dollar kept dropping. And their stance is pretty much the same, saying that the fundamental data has been very promising to support further reserve raise the interest rate. They also think that the White House policy right now, they want to have a fiscal stimulus, but they also want to have a protectionism. And they also want to have a weaker currency. It's just not going to match up. So it's not going to work, fundamentally speaking. They cannot want to have a fiscal stimulus, but also don't want to have any good trade relations, and also wants to have a weak currency. That's just not going to match up. So right now, from Goldman Sachs, it's not from me. From Goldman Sachs, think that the current US dollar bearishness is really from Donald Trump. So as many of you already know, but from the top tier investment banks, it's just more confirmed. And their suggestion is that the market has to get used to Donald Trump making these kind of comments. And eventually the market will get used to that and will be fine, not going to sell US dollar because of that anymore. The question is, we don't know how adaptable the market is going to be and when it's going to adjust itself in front of those comments. But eventually it will be, and eventually if the data continue to be strong, eventually US dollar will revert back to the fundamental bullish. But right now it is sentimentally bearish. That's from me. I think it's sentimentally bearish because we are going to have more executive order from Donald Trump. We are going to have more comment from him, which, providing from the past experience, is going to rattle up the market more and more. So unless we start seeing the market calm down in front of his comment, right now I think the sentiment is largely more bearish. Because of that, as I mentioned before, I personally don't want to get to US dollar for any long-term trade. Definitely will not hold it over the weekend, and I don't recommend anybody do that unless you are doing a more weekly perspective, which you really don't want to pay too much attention to this day-to-day political drama. But if you're not doing a weekly stance, then it's best to trade US dollar in a much short-term perspective. Now, it's going to pass because, as I mentioned, if you remember back in 2015 when the Islamic State's first raise up caused global issues, every time there's a global terrorist attack, you see Japanese yen has a tremendous inflow. And that effect died down in 2016 when we have more and more terrorist attack without any safe haven effect into Japanese yen anymore. Basically, people have become very numb in terms of the terrorist attack. Back then, when Paris was first attacked, was a huge issue. And then Belgian airport was attacked. I remember that day, Japanese yen versus British pound, it dropped, I think, almost 300 pips. And then afterwards, it's just, you don't see those kind of effect anymore. Not only that, it recovered very, very fast. So I think it's going to be the same thing applied to Donald Trump's comment. Right now, whenever he opens his mouth, you see the US dollar drop significantly. But now it gets recovered, gets faster and faster. And, way down the line, people are going to get used to him. People are going to get used to, hey, that's the new president. That's just the way he is. Then the market is going to revert back to the fundamentals. So that's my comment. But again, don't catch the falling knife. That means that don't buy US dollar just because you are so convict to the fundamental side. It's really best for you to stay out in front of this firing range and wait for everything to calm down. For me, that's my strategy. For British pound, fundamentally neutral and sentimentally neutral. As I mentioned already, we don't have any guidance from Bank of England. I also don't want to guess or predict what's going to happen because honestly, nobody knows. Look how much economists has guessed wrong from last year's Brexit. Everybody say that Britain is going to go into recession. Not only they did not enter recession, they actually had the best expansion of GDP among the Eurozone. I think maybe among the global, I don't know, among the GA country. But everything it was very promising in 2016, regardless of the Brexit. So not only the recession did not happen, actually, Britain actually performed very, very well. So I don't want to guess about that direction. First of all, because I'm not an economist. Second, I think this is a historical event for any country to leave Euro. So because of that, no one really has that sheer conviction. And I want you to really have this confidence toward yourself as a trader, knowing that a lot of great trader, a so-called legend, like I mentioned before, like Soros, had made a lot of mistakes in these recent years' events. It's because we are really entering a new era right now, and nobody knows not only the events but also the crowd behavior had changed significantly from the past due to the technology and social media. So we don't really know how the crowd is going to react, and it is you can always have a bias and some sort of probability, but always trade with care. Always be careful of any outcome and be fine to know that anything can happen in the market, right? So don't blindly holding certain conviction when the market provides you that it's not going to happen that way. For Canadian dollar, I think it's fundamentally bullish and sentimentally neutral. Now this bullish again comes from oil market because I do think OPEC has strong enough influence to basically raise the oil price to at least $60 per barrel. I also think because although we do have a large output from US shale producer, which kind of drive the oil price down, but because of the fiscal stimulus and the infrastructure policy from Donald Trump, Chinese economy is keep growing up, and he is basically going to work on the energy sector. I do think the oil market in general is like there's a more effort into that, right? Maybe the supply is still soft, but there's more artificial effort from OPEC, from Donald Trump, from the world to basically work into this energy sector to boost it up. So that's why Canadian dollar might be benefit from that. We also have energy minister today from Canada saying that he does not think the renegotiation of NAFTA will affect the energy sector. He actually thinks the energy sector might get a good deal. And that's what I thought before as well, because the truth of the matter is that US can live without the Mexican labor and fruits product and things like that. That's just a fact. But US cannot live without the oil from Canada. It cannot live without the water from Canada. Especially if you live in Canada, you realize that just how much things are really tied together, from Niagara Falls to all the lakes. It's just not possible for US to basically cut a line, say, okay, we are going to close our border, ignore Canada. It's just not in their interest. So it doesn't mean a NAFTA deal will not cause volatility. It will cause volatility, but in the fundamental side, I don't think Canadian dollar will be affect that much much because the NAFTA deal and because the oil sector, things like that. However, there is still a sentimental risk. It's coming up due to how the negotiation is going to be. Canada does have a very liberal government that is completely different in the immigration stance toward US. That will be a diversion for the two administrations to work together. So that will be a sentiment risk, and that's something you have to watch out. For Australian dollar and New Zealand dollar, they both are fundamental and sentimentally neutral. The reason is because the current US dollar weakness, of course, helped Aussie and New Zealand tremendously. And they both have some fundamental strengths. Australian dollar has a great trade balance this week, and New Zealand dollar had a great CPI data last week. However, they both have fundamental weakness. Australia still have a soft inflation data, have a soft employment data, and also have a contracted GDP data from last year. So that's something to worry about. New Zealand dollar again had a disappointed employment data this week. So that's why fundamentally they are good, but not particularly bullish. Sentimentally, they are neutral. I put bullish here for Australian dollar, but I think that's going to change for the next London session because of the Chinese interest rate. It just raised up, which we already see commodity future drop. So I do think sentiment is going to be neutral for Australian dollar. It really depends on what's your time frame to trade it. If you are about to trade in the next London session, I will probably sell Australian dollar. But in a more like a swing trade perspective, they are still an attractive currency to buy. You just have to be careful. Don't buy at a very high point, which they are right now. So if you want to do swing trade, maybe when you see any drop will be a good deep buy into Australian dollar and New Zealand dollar. But if you want to do a more intraday trade, then just go with the flow to sell Australian dollar for the next London session. A few things you have to be mindful is that next week you will have RBA and RBNZ with their rate decision. Although most likely will be an unchanged, but during the press conference you might have a hawkish or dovish tone. So be careful for holding any currency well into next week's events. For Japanese yen and Swiss franc, again, they're fundamentally neutral or bearish because nothing changed, but sentimentally, actually, I think they are quite bullish. Why do I think that? Because after this week, I just really have more conviction that the market is going to be more volatile, at least for the next few weeks. And as you see, right now, the market is up and down, day to day. And what's really driving the market besides from the data is the political drama. Not only from US, you actually have that from ECB, from Euro, you actually have that from France, you are going to have more from France as well. So that's what's going to be the headline for all the news media. And that alone, of course, is not going to give Japanese yen and Swiss franc any sentiment. But based on the crowd reaction this week, I do think people or traders, investors actually got scared because of that. So people are actually react to this kind of political events more and more, at least for now. So because of that, I do think there will be more sentimental more negative sentiment from the world due to this kind of political movement. We actually have more world leaders about to schedule to meet with Donald Trump. So because of this uncertainty, Donald Trump is also going to have more executive order, more comments. He actually probably going to have the sanction on Iran tomorrow, which is going to come out very soon. So we're just basically going to expect more volatility, and those volatility will actually benefit for Japanese yen and Swiss franc as the safe haven currency. So that's why I'm actually in favor for buying them. If I want to hold any currency, I actually only want to hold Japanese yen and Swiss franc, believe it or not. Although they are both bearish fundamentally, but I'm much more confident to hold them into a lot of uncertainty. So my current strategy, again, the first thing is to have a much shorter time frame for trading, or to have a much longer time frame for trading. So again, you either do an intraday trade or you do weekly. So just don't do anything in between because you will get whipsaw in this kind of up and down movement. I do want to buy Aussie and New Zealand if they can come down to a much better level. But and especially, I do think the next London session they will be sold off. But because of the RBA and RBNZ meeting next week, it's probably best to not hold anything into that. I will also want to buy Japanese yen and Swiss franc. especially if they have been going to a better level. And these are the only two currency I'm more confident to hold over the weekend. Probably not Swiss franc because their central bank is notorious for the intervention. So maybe Japanese yen. I also want to buy Canadian dollar. I think it's, but only if it's at a good level. I also don't want to hold it over the weekend because it's so much volatility over the oil market to upset it. But during a day-to-day trade or in the intraday trade or even daily, Canadian dollar, it's actually the only Canadian dollar, New Zealand dollar, or Australian will be something that you can maybe hold it more than days, but definitely not US dollar, not euro or British pound. So euro, US, and pound will be. I'm not particularly in favor of any of the currency. They were basically just a counterpart for me to sell or buy against other currency. Okay, so let's take a look at what's going on right now. So first thing first, I am still in my dollar yen trade, which it's very surprised because I have the expectation to get stop out already, especially from today's European session. And look how low we are at 1.11205. That is actually 1 pip away from my stop loss. So I don't know if it's a sheer luck or anything, but that's just for me, this is really a losing trade already. I'm not even paying too much attention to it right now. But it just shows you, actually, it's been holding up quite well. As I mentioned, we still cannot break below 11250 handle. And that means 11250 is a strong handle to hold it. Yes, we penetrate 1, 2, 3, 4 many times, but none of the candlesticks are able to close below it. I don't think it's because the BOJ intervention. It might be, but nevertheless, a lot of buyers are basically holding up very well against that. I'm also surprised that we actually never been able to touch 112. That might really be from intervention, or that might just be somebody really guiding it. Because what happens if you break 112, you will see drop. There's going to be a lot of stop order to sell from this area. You might drop all the way to 110. So that's not something that the Bank of Japan wants to see, of course. So that's why there might be intervention here. I don't know. I didn't see too much because I wasn't trading after today's morning, so I didn't know what's happening there. But nevertheless, I'm surprised I'm still in. So what's going to happen right now for me personally, for anyone right now? I don't know what you should do, to be honest. Tomorrow, we'll see what happens between now and then, because due to the two promising labor report from US, people might start to pricing in for tomorrow's non-farm payroll. But that also means once the non-farm payroll result come out as expected, we will see another sale into US dollar. Because again, that's buy rumor and sell effect. So I do want to use the next session to get out of this trade, or perhaps hold it until the release of non-farm payroll to get out. That's my personal plan. If you are not in this trade, actually you could get into dollar yen in an intraday perspective and ride it up until non-farm payroll. We might go up next few hours for 100 pips or so, all the way until the non-farm payroll. But definitely, I don't recommend anyone to actually trade non-farm payroll. I know it's kind of weird because normally I like to trade non-farm payroll myself, but in this time, I actually don't want to get into a non-farm payroll. I actually don't want to trade any US dollar data right now because what's really driving it is the sentiment. So I don't want to buy US dollar at the release. I much better to buy during or before the release so you can ride it up. That really depends on what's going on in a much shorter time frame, like hourly chart. So if you go to dollar yen in the hourly chart, so as you can see, ever since this is the weekend gap, right? So ever since the weekend gap from Donald Trump's comment, we've been going a very steady downtrend, right? Going down, going up, and this today's 11205, 11208, we try to penetrate a new low, but we fail. So this is a very significant double bottom, and I know a lot of traders are looking at this. If you go to 4-hour chart, you will have the same thing. This is a significant double bottom. It's the same thing as here. You're going down, going up, a double bottom. Now it goes up at least to the previous high. So I think that's, technically speaking, that's what's gonna happen. We might see dollar yen going up to at least 11370 level, and that's still, you know, some pips for you to make. And then people might wait for non-farm payroll before they decide to sell. I'll see if we might try to hit 114 again, but definitely for me, I'm just going to use those area to get out. I mentioned I want to get into Japanese yen trade, but we'll see what happens. If we went to 114 and I have a sort of reversal signal, I will sell dollar yen actually, regardless of the good non-farm payroll. But then again, we have to see what happens with non-farm payroll, because the result might be really, you know, well above everybody's expectation. But that's my plan for now for this trade personally. And if you want to make some sort of intraday trade, you could actually buy dollar yen and ride it up until the non-farm payroll. But it's risky. It's not a really high conviction trade. I personally not going to do it. Even if I'm flat, I'm not going to do anything in dollar trade right now. So that's the only let me get this back. So that's the only thing I have. Really surprised I'm still survive. Other than that, let's take a look at our currency pairs. So Euro Pound. Euro Pound yesterday, yesterday I have a very positive outlook for British Pound, because I do expect Bank of England to have a more hawkish tone. But today, they did not give us that. Not only that, they actually basically not encouraged to raise interest rate at all. And I'm actually feel it's more dovish from my personal view. So that doesn't mean Euro Pound will be a good buy. That just means British Pound is now more neutral instead of bullish. And that's why this Euro Pound will be a more sideways currency for me, a sideways movement. I don't have any particular direction for it. Euro Swiss also a sideways currency. Euro dollar, we do have this, bearish signal. Now, it's really hard to. You could sell dollar if you want. I will not recommend you to sell US dollar in a daily perspective, especially tomorrow is Friday. So for those of you who are wanting to do a more swing style, I would say just ignore it right now, because it's too risky, too much uncertainty right now. If you are okay to trade in an intraday trade, yes, you can sell Euro dollar in an hourly chart if you have a sort of reversal signal and if the trend is in your direction. Let's take a look at that. Okay, so if you go to Euro dollar right now, yes, you slowly dropped. You could do that. I just personally really don't want to get into. I am not going to do it because I'm already in a dollar trade. So I'm not going to get too much exposure into dollar. You can sell it, and just be careful when a non-farm payroll release. You have to get out. Don't be greedy and saying that, I want to write it up, even though the result is most likely going to be very promising. But if it's not promising, then definitely you have to get out even faster. So you could do it, because I would say you can either buy dollar yen or you can sell Euro dollar. So either way, you can choose whichever you like. Because of the equity market from Asia right now, it's negative. So it's maybe best for you to sell Euro dollar, especially you also have a daily signal. So I personally not able to do it because I'm already in a dollar trade. But you could do it if you are able to trade intraday trade in front of your desk. If you're not, then I would just ignore this signal basically. Euro Aussie, a huge drop basically. That's what happened to Australian dollar to the old Aussie pair today. Euro CAD, nothing to talk about it. Euro New Z and Euro Yen. Pound Swiss. So this is going to be a drop day for British pound also. And you also have this kind of engulfing candle for British pound. Again, you could sell it only if you are in the hourly chart. You could do that all the way right up to the non-farm payroll. I cannot do any dollar trade myself, but you could do both. Definitely, I don't recommend daily trade. Don't recommend anybody holding any dollar trade for now, especially if you want a long US dollar. Pound Aussie, another big drop day. Now, is it good enough to short? It's probably not going to go too far in the next session because of the Chinese. They just tighten up the interest rate and the commodity price has been sold off. Probably not gonna too far. Next Monday you will have the RBA statement, so I definitely don't want to get into any Aussie trade. I don't want to hold it over the weekend. So again, for daily perspective, I really don't recommend anybody to get into it. For the hourly perspective, because of the negative sentiment from the equity market and China right now, I do think Australian dollar will be pressure in the next session. So it's not something I will do in the hourly perspective. Pound CAD also have this kind of bearish signal. Pound CAD will be much better if you can do intraday trade. You can look to get into it because it's better to do. But again, I don't basically not recommend people to get into any trade on Friday. It's just not, especially during right now we have this heightened sentimental events constantly every day, and I can guarantee you Donald Trump is going to make certain kind of comments over the weekend again. If it's not him, then somebody else. So you will have, you cannot expect to see a lot of gaps, maybe more often than not. And if you're doing anything in Canadian dollar, you have to watch out what happened to the oil market. Oil market is always very volatile, so it's not something I recommend to hold over the weekend as well. You can't hold everything over the weekend. Again, it really depends on where is your stop losses, but you don't want to initiate a trade on Friday. It's just not. It's just you basically set yourself up with so much uncertainty if you initiate any trade on Friday. Pound New Zealand, same thing. Nothing to talk about at this technical chart, but also New Zealand central bank is going to have a rate decision next week. Pound Yen, again, not something I'm looking. Actually, Pound Yen might not be bad to short it. I'm either going to, looking at in the daily perspective, because you can either short Pound Yen or you can short Dollar Yen. But nevertheless, it's actually not bad to short, to buy Japanese yen over the weekend. Let me take a look at Euro Yen. So Euro Yen is not something particular. Pound, because of basically UK, because of the Brexit and Parliament result, you will have more volatility. So that's why Pound Yen will actually maybe act more better. I do again wants to go into intraday trade, to intraday chart to see any opportunity. But if you are more in a daily perspective, you could do Pound Yen if you really want to do it. I wouldn't recommend it. And even if you do it, you definitely want to put your stop loss way above 145. I know it's very, about 400, 350 pips away from you, but that way you really have a much better safety. That's my personal view for Pound Yen. Swiss franc, Japanese yen, nothing really to talk about this. Now, dollar Swiss, we have this nice kangaroo tail at 200-day moving average at a very nice area to buy. Normally, again, if it's a normal situation, it's beautiful. You can buy here. You can really buy at this insider bar. Basic. That's a much safer thing to do. However, because of the current situation, again, I'm not recommending anybody to hold dollar long over the weekend. Dollar cat is exactly the same thing. You have this beautiful kangaroo tail. It doesn't have any space actually. But again, I'm not recommending anybody to hold it over the weekend. Dollar yen, it's going to be either, again, not recommending anybody to do anything about it. Aussie Swiss, Aussie dollar, Aussie cat. Sorry, Aussie cat, Aussie Newsy. You see, Aussie Newsy actually went up, strongly. I don't think, yesterday, because even if you are a day trader, you basically missed the feel out there, basically. And that's just a shame, and really nothing much you can do about it, because you do have this really comes from the risk events. So we might keep going up to touch 1.0550 or even, at this 200-day moving average. If you somehow got into this trade, definitely set to break even prior to the weekend, because you do have the RBA meeting coming up on Monday. Other than that, it is what it is. Sometimes you do miss a trade. Let me take a look at hourly chart. I don't think it never. Yeah, it's never come down to hit it. So you have the release at 7:30. The interesting is that even after the release, it doesn't go anywhere. It's a doji movement, right? It only starts to pick up after the risk events. Nevertheless, we did not get into this trade, and it never really come back to give us an opportunity, and that's fine. That's just the way it is. So definitely, if you are not in this trade, you basically miss out already. That's fine. So that's fine. Aussie yen, okay, nothing really too significant. Cat Swiss, cat yen. Actually, Aussie yen might be a good sell if, but I don't have a signal. Yeah, never mind. New Zealand Swiss, New Zealand dollar, New Zealand cat, and New Zealand yen. Okay, so that's pretty much it. My recap for those of you who want to do swing trade. Friday, I don't think today is a good time to enter, so it's best if you just let it go. And weekend, we will do another analysis for a weekly trade, which I think will be much better for swing trade at this point, basically at this time of the day, due to a large uncertainty politically and globally from many different countries' leaders. For those of you who want to do intraday trade, I recap, you can do euro dollar short in the intraday trade, because I think dollar will go up for the next session all the way until non-farm payroll. If the result is as expected, dollar will be sold again. If the result is negative, dollar of course will even be sold off more. If the result is highly positive, you will see a short-term spike, but that's not going to last too long. And nevertheless, I don't recommend anybody to hold US dollar long over the weekend. For Euro Aussie, I don't really have anything to say. I don't want to sell any Aussie trade in the next session, because I do think Australian dollar will lose some momentum due to the interest rate from China. Where was I? Euro New Zealand, Euro Young. Oh yeah. Another alternative is cable. You can sell it for the next session, but same thing, sell until the non-farm payroll and get out. Or you can get out after the release. If the release is negative, definitely get out. If the release is positive, you also want to get out. If the release is very positive, you can ride it for a few spikes, but definitely wrap it up before the weekend. Pound Aussie also have a good daily bearish signal, but I will not get into it even in the intraday chart, because I do think Australian dollar will be sold off in the next session. And that's pretty much it. Pound CAD will be a much choice to get into it. I might sell it in the intraday perspective. And that's pretty much everything I have. Another alternative is dollar Swiss. You can only choose one. It's either euro dollar, pound, or dollar Swiss, or even dollar yen. And the strategy is exactly the same. You are basically buying US dollar all the way until the non-farm payroll. Now, normally I would not recommend that because normally we won't get into a risk event, maybe 48 hours before the event. But if you are intraday trader, you are able to monitor it. It's not a bad strategy to do it because everything is too short-term lived nowadays. And so that's something you can consider to basically get into a 113 right now, right all the way up to 114. But it's risky, so be careful. So guys, that's it. I don't really have anything else for this daily chart. I will come back tomorrow or over the weekend to do a weekly analysis and weekly outlook. And I will talk about what's going to happen next week, the risk events. First thing just to watch out is that Australian RBA is going to have a rate decision. So be careful for any Australian dollar trade. I don't recommend anybody to hold any currencies over the weekend. If you really want to do, then you can. I will personally only buy Japanese yen. So I either sell euro yen, sell dollar yen, sell pound yen, Aussie yen, New Zealand yen. The reason is because although Japanese yen is fundamentally bearish, I do think nowadays we have more and more geopolitical events that might happen over the weekend to cause a negative sentiment. And that way, it's actually very helpful for Japanese yen. So that's the only thing that I will have a little bit confident to hold over the weekend. Other than that, I'm going to be very completely flat before tomorrow's weekend. So that's it, guys. Hope this video is helpful. If you have any question, feel free to let me know. Otherwise, I will be back either tomorrow or over the weekend. Thanks for watching. Have a good day. Bye-bye.